That's what I'm anticipating there for gold. Pretty aggressive stuff this afternoon, but I am expecting some pretty big stuff out of the back door of the CPI. If it goes long, it goes long. We're in profit. If it goes short, I want to be able to capture some profit on the other side, offset some of the loss from the risk at market in this one. So that's my play for gold. Now moving on down. Good afternoon, everybody. Good afternoon. Hope you're all doing well, ladies and gentlemen, and welcome to this afternoon's US CPI data release, the one that everybody's been waiting for. Very, very exciting. Keen to get started here today as we approach CPI data release time. We're currently coming up to 1:05, which means we've got 25 minutes to get stuck into the multi-asset class markets and prepare ourselves for this afternoon's trading event. So good to see you all. We've got Scotty D. Good afternoon, mates. Hello there, Asif. Good to see you, buddy. We've got Juan Pa in the room and a bunch of others as well. I can see we've got Jack there. Hello there, mate. So hope you're all doing well, guys. You've had a good day so far. And as I said, we have been excited and ready and raring to go for this week's CPI as the US government shutdown has continued to delay any meaningful data releases into our beloved markets. So far, we've seen some incredibly stagnant price action as fear and uncertainty have enveloped the markets. And of course, we haven't really had any repricing scenarios or market volatility as a result of the lack of the financial data that we've had coming out as well. At the end of the day, the fundamentals run the markets. And so, therefore, without them, things have been a bit sluggish. But that being said, it all hopefully will change today. I did outline some of my thoughts in the introductory video, if you like, to this session today around what I believe will be happening. As I mentioned already, a lot of repricing going on likely will cause extreme levels of volatility. As the day unfolds, the VIX volatility index has actually seen a bit of a rally as well, leading into the CPI, which is obviously not that surprising. So what we're going to do then, as we usually do, we're going to dig into our markets, check out what's been happening, and prepare ourselves for some intraday/day trading opportunities. So let's get going, I suppose. So the DXY, first and foremost, currently trading at 99.023. The econ for this afternoon's, event we have core inflation month over month data showing at 0.3%, same as the prior figure. So we had the prior figure at 0.3, we got the analyst expectations at 0.3%, and so that's what everybody's anticipating. So stability in month over month inflation data. They are also looking for stability in the core inflation annual rate, which was 3.1% in the last data. 3.1%, which is the analyst expectation. So that's what we should be expecting today as well. Again, the same goes for the inflation rate. This is the base inflation rate on the monthly side. We've got a 0.4% prior figure and a 0.4% analyst expectation. And then with the base annual rate, we have a 3.1% analyst expectation, which is a 0.2% increase over and above the prior figure at 2.9%. Now, what this may indeed cause is an immediate shift in sentiment to the downside, but then quickly on the other side get a bid back. I think, on a personal note, that's the analyst's expectations. What I believe is that we're going to see a price rally in the dollar almost immediately. That's what I think is going to happen. And then as the day unfolds later on this afternoon, possibly into 4 p.m., 5 p.m. as we come to the weekend, we will see a correction. So ultimately, when we wake up on Monday morning and we get back to the charts, you will see a big spike followed by a corrective to the downside. That's what I would anticipate is going to happen. So it's not necessarily the fact that we're looking at any sort of wild out of trend figures here. They are within trend, but the fact is we haven't had any major release in this data for a while now. The markets have been holding their breath for it, and above that, we are looking at the potential of a slight 0.2% increase in the base annual rate as well when it comes to inflation, which is obviously going to be dictating the Fed policy, which is up and coming, and where we're going to see the next Fed rate cut or maybe not. So that's really what this is all lending itself to. Now we've got 20 minutes to go before the news release takes place. So what we're going to do is dig in, find some trading opportunities for us to get stuck into this afternoon and see where we end up. So for those of you who are UTC traders specifically, we do have some market exposure currently. Looking at gold here, not doing too well, unfortunately, guys. We are basically at break even. We did do really well initially, came all the way up to our liquidity point up there, but then failed to break and close above. And now we're basically back at break even for a very, very small, very small loss currently. So there's nothing to be concerned about here. But what look, we've got a decision to make, don't we? Because we're already in gold. And my bias is ultimately for the dollar to have a bit of an increase from today's CPI, which would historically mean that gold is going to sell off as a result, as we see the safe haven flow from gold back into the United States dollar based on bullish CPI data. I still, however, am not entirely sure I actually want to get out of gold. The reason being is because if you look at the correlation, so if we go back over to, let's just go back to the dollar for a moment here. So DXY currently trading there, but if we go to the 15-minute on the DXY, okay, let's just do this exercise very, very quickly. We go up to the plus sign here and we look for gold, gold USD, and we compare the two. You will see that over the long term, we have some correlation. This is all looking skewed. We need to go up to the daily time frame, get a bit of a better idea here. So gold has been absolutely charging the way, whilst the United States dollar has not been losing any value. So we've continued to range from, let's say, April 25 all the way through until October 25, almost coming into November, not having lost anything. We are exactly where we started towards the beginning of the year. Not the beginning of the year, because we did drop off initially. But since we've been range bound in the dollar, gold has continued to surge. And so we haven't had the correlation, the inverse correlation more specifically, has not been there. It's become undone slightly. And so I'm thinking if the dollar does have a big surge today, based on the fact as well that we've actually already had a relatively significant sell-off in our gold market. It's currently down minus 1.54% today, but it has come from high up here where it double topped at 43.83. I'm wondering if this is actually going to surge this afternoon. And for the sake of us only having 0.25% at exposure in gold at the moment, I'm kind of thinking to myself, is this actually worth running from? So I'm going to give obviously the choice is always yours. But for me, I'm going to let this run and just run the risk of it being a loss. I don't really care. At the end of the day, you shouldn't care about anything. It's 0.25%. It's not, it's no skin off your teeth. With slippage, if it's an extremely volatile event, you're probably looking at losing a maximum of 0.3 to 0.5%. Again, I'm still happy to swallow the loss for the opportunity that the market may end up increasing in value here. The other thing that I would be certainly willing to look at is a hedge on the other side. So we've got these lows down here at the moment, and if we look back in time, we also have a really nice point of liquidity, which is situated down there at approximately 39.50. I'm thinking we could go for some seriously short-term in and out trade in gold for a hefty risk-reward ratio, which would offset the risk that we have at market in the current long. So for example, we could look at a short, very, very aggressive entries today, guys. You know what it's like. When you get the slippage, you want to be in the market as soon as possible. Really nice tight stop loss down here, looking maybe for a 1 to 3.6, maybe a 1 to 3.7, something like that. Just capture the bar as soon as it gets in. At a 1 to 3.6 minus slippage, you're probably going to realize a result of around a 1 to 2.5. But at 0.2% risk, you have covered the stop and gained a profit. Now, that's a great segue into risk management this afternoon, folks. We are going to be risking a maximum per position of 0.2%. Okay, we're bringing that risk down by 0.05% across the board on every single position here. We are only risking a maximum of 0.2% per every single order that we take today. Excuse me whilst I'm drinking my coffee. So that's what I'm anticipating there for gold. Pretty aggressive stuff this afternoon, but I am expecting some pretty big stuff out of the back door of the CPI. If it goes long, it goes long. We're in profit. If it goes short, I want to be able to capture some profit on the other side, offset some of the loss from the risk at market in this one. So that's my play for gold. Now moving on down. So I did mention this yesterday. We are looking at the Euro USD, potential for a second attempt on this one as a result of the CPI move today. So if my bias is correct and the dollar does get a push as a result of today's CPI, then we are ultimately going to be looking at the euro dropping in value against the United States dollar. What this means is we're going to be looking for shorts in the Euro USD. Now the margin from the point in which it's trading at the moment to down there, which is ultimately where I'd be looking for the entry, is actually quite far. It's not ideal. It's not the perfect situation. But if I'm correct in my thinking today, and the market is going to move just as much as I believe it is, that's not going to be too much of an issue. The other thing to consider here is by the time the market reaches down here at 115.76, it does actually mean we're not going to be at the forefront of the slippage issue. It does mean the spreads may have tightened up a little bit here as well. It's kind of good things all round. The only issue, of course, is the market does have a way to drop before we actually get there. So what I'm going to do is line myself up with a short down here. Entry at 115.75. We're looking for a target at approximately 115.48. The stop loss for this one, again, really quite nice and aggressive. Probably looking at around a 1 to 3.2. No more than that, though. So around a 1 to, well, this technically it's 1 to 3.26, but around a 3.2 is where you want to be sitting on that one. This will account for any potential price action pullbacks, little potential wick throughs that come through the zone here as well. And for that continuation back down to the target profit at around that 115.50 point. So that's looking pretty decent. Now in terms of a long, because we don't want to just be pricing ourselves in on one side of the market here, right? We've got this level in here, which can be recycled from back there. I'm going to drop that down just a touch now that we've got more data to work with. We've got some decent price action retests in there as well, which looks quite nice. That we can certainly be using to our advantage here. Now the margin to trade is pretty decent between the 116 point and the 116.40 area. The problem, of course, is that we have the damn ceiling in price, which is directly above us at the moment. So that's the kind of median, right? We've got the lower half, we've got the upper half, we have the floor, and we have the ceiling. So what we will look to do here, very small day trading style trading opportunity, definitely, is in the market ASAP. We're going to be looking to get out of the market there, and we're looking for a stop loss at about this level in here. Now that's yielding a 1 to 2.74, but make no mistake, if the market jumps instantaneously, we're going to be looking at a 1 to 1.5. Now I like saying worst case scenarios because the only way from there is up, and it would be great to get something better. You guys, some of you have been through many CPI trading events with me and NFP trading events. There's been some pretty disastrous things that have happened. I mean, I remember the last major news event we traded live together, I had a gold short, and the gold short was based on a 1 to 3.1. I actually ended up with a 1 to 0.8. Just a 0.8. So it was pretty rough. Sometimes I get lucky, sometimes I don't. That's going to be the same with you guys. Fills are really at the behest of your brokerage. So there's nothing we can do about that, but plan as best as we can. So nice little in and out trade up there for a 1 to 2.74. I mean, you can get extremely aggressive with your entry, just dialing that in at the top of the liquidity breaker structure there for a 1 to 3. Possibly bringing that stop loss up. I mean, we've got a stop loss at the moment. What are we looking at? I mean, it's not much, guys. We're looking at really tight margins here. You know, we're looking at a 5 pip stop on that one. I don't really want to do anything more than that. That really is at the maximum that I'm looking at there, squeezing that one out. So that one's a 1 to 3.54, and I'm happy to rest there. So we got the short down below, we got the long up above. We'll see what we can get out of that one. Download. Next up, let's go down to the USD yen. Of course, we're going to be thinking about risk on and risk off in the markets. The USD yen is at the forefront of that risk sentiment change. And of course, the CPI is going to be dictating that to us this afternoon. Let's just do a quick time check. We're 20 past 1. We've got 10 minutes to go. So USD yen at the moment. Let's think about this. Let's go to the daily time frame, grab some context. So big daily high, recent high up there, structural point directly above price. The news event today will have the power to just break straight through this, but again, it's good trading practice to always try and find the path of least resistance regardless of that. I'm not really feeling USD yen long. In all honesty, I'm just not against this big point. This is a huge point of inflection. Commercial money in here is changing hands like the wind. I just don't want to be up there taking long straight the way through and gambling. Okay, we're not gamblers here. We want to be precise. We want to be doing things with a process. So the only way we're going to be able to get this one off is by doing a break, close, and a retest here. Okay, if we get the breakout, we get the retest, then possibly we can look at taking the long. So what I'm going to do is I'm actually going to fire off an alarm in there. That's going to ping us when the market reaches there, if it does, and then we can explore the opportunity of taking a long thereafter. In terms of the short though, we've got availability. We've got this really nice breaker structure point down here. That looks absolutely great. And we've got a really solid point of inflection down here as well. So now we've got a pretty decent trading margin. So this would make perfect sense. In fact, I could even foresee the market coming up to here, rejecting this area of liquidity and coming back down there in the afternoon. So we may actually be able to get some opportunity here. Looking at this one again, let's have an entry, I would say at around 152.68. We've got the target profit, of course, which is going to be down there at 152.18. And we've got the stop loss, I would say situated at around there for a 152.85. That's going to yield a 1 to 3, 0.74, 0.73% net return. So actually, no, I do beg your pardon. This is based on 0.2, so a little bit less than that, 0.6. So not bad at all on that one. Yeah, that's really nice. So we'll do that. Download. So we've got a couple of FX trading opportunities there. Do we want to look at cable? We've got to get the US indices done. We've got gold, we've got the euro dollar, we've got the USD versus the Japanese yen. So do we want cable? Let me just highlight that right. Yeah. I mean, possibly. If the dollar rises, then we've got a decent margin of the previous lows, don't we? So let's have a look at this. In fact, I don't need it that wide. Let's bring this down. Let's bring this down to here. So we've got, this is the breaker structure point, and we have the lows, which are down there. That right there is a path of least resistance. It's certainly a margin worth trading. Everything looks pretty decent on that front. So I think we're going to give that one a go as well. So we're going to look at the entry at around 132.95, targeting 132.54 with a stop loss. This is going to be a little bit more modest, 133.10. I'm not willing to sacrifice any more on the stop front. I need it a decent margin above the zone there. That's going to yield us a 1 to 2.7, let's say. But the net risk reward, the realized risk reward after slippage and the increase in spreads, probably going to be a bit dicey, maybe at around a 1 to 1.5 or a 1 to 1.6. Again, speaking here in worst case scenario, you could actually get a really lightning fill and be filled in at 132.90, for example, and that's going to give you a 1 to 2.3, 1 to 2.4. We just got to see. There's no way to be able to tell, beforehand. We just got to see what we end up with after the fact. So that's that one. But there's also the opportunity here for a long as well. So I'm going to draw in this. Really nice point of inflection there. Again, secondary retest, third retest, fourth retest. Really nice point of inflection. Okay, commercial activity is happening at around 133.30. The next area up from there is at this area in here. Now, this is certainly more of an in and out day trading style of trading opportunity. Make no mistake. But I think if we can get in on the breaker structure in there, we could potentially look at a very solid little trade idea, which would be really nice for us to walk away with this afternoon if we can get this dialed in. So I think that's the size of the move that we could have here. This could be done and dusted in the space of a single candle, right? A single 15-minute candlestick. So I'm going to go for a 1 to 2.8. Very, very small short-term trade on that one. Different style down below. We've got two different styles of trading strategy here. We've got the more intraday style, and then we've got the more day trading style above. But we've got a really solid no man's land as well in the middle here, which will allow the market to flex and breathe at the point of the news release taking place. So we're going to go for that. Download. Right, we're against the clock here, guys. We've got 6 minutes to go, and I've got a lot of numbers to punch in. So let's get up to our US indices. So now moving up to the US indices. US 30 Dow Jones, NAS 100, probably taking the limelight today. I don't see any reason to have the S&P at this moment in time, so I'm probably going to stick with the NAS 100. So, what are we looking at currently? Price trading above the major point of inflection. Okay, we're up at ATH. It's looking pretty powerful at the moment. It's had a very strong, not necessarily a strong day today, but a very strong week, I would say, overall. I'm going to drag a zone across there. We've got a decent breaker structure point, which is below the low of that candlestick in here. And, or could we, to be honest with you, just going back in time, I'd actually prefer that one. So I'm going to drag this one out, and that's going to be the trading margin. So what we're going to go for here is an entry there, targeting down here at around 25.13. Stop loss is going to be tucked right in behind there. Nice big margin above the little breaker structure. But to be honest, folks, if it goes past the breaker structure point, it's going to stop anyway. But this is going to yield a 1 to 3.9. Realized result, again, worst case scenario, you're going to be having that. So maybe a 1 to 2, maybe a 1 to 2.3. That's worst case scenario. Again, I'll run the numbers after, once we get the orders in the market and so on and so forth. Now, in terms of us taking the long, it's obviously all-time high trading. So we're going to look at this area as the breaker structure. And what we're going to do is we're going to build in an automatic 1 to 3. Usually I run these on an automatic 1 to 2.2. Obviously, with the CPI event today, we're going to increase that risk reward a little bit more. So we're going to have an automatic 1 to 3, and that's based on the break above the high. And that's your long in the NAS 100. Done. Right, US 30 Dow Jones. Let's get some industrial index in there. So let's wipe this out. We've got, okay, let's completely ignore what we know about the left. What we're going to do here is we've got the high there, and we've got a pretty strong low margin here. Very nice margin to trade in there at the moment. We have the price line, which is actually indicating exactly where the breaker structure point for us for the short is. It's going to be unfortunate if we break below it before the news event takes place, but we'll just have to make do with what we can there. So it's going to be a 50% stop loss between those 2 points. Entry at around 46,804. You're going to be running a very, very high risk trade setup with that one in terms of slippage. I mean, unless you've got an incredible broker, you're probably going to be looking at maybe a 1-to-1 out of the back of that one. Unless you get some really lucky fill, you can bring that stop loss down. Maybe you'll want to. Maybe we will want to. Maybe we'll run the stop at 46.83. That's going to yield a 1 to 2.5. Because at the end of the day, the news happens. The bar's going to drop. The stop loss, unless we get an instantaneous correction, the stop isn't going to be anywhere towards being hit. So let's go for a 1 to 3 on that one. Stop loss is going to be at 46.83 or 8.27 to be exact on that there for the short. For the long, again, another breaker structure setup. We do have point of liquidity, unfortunately, which is directly above. That's really annoying. Now, a CPI event, the US 30 Dow Jones is not going to bat an eyelid about it. So, what are we doing for time? 28. Guys, we're running out of time here. I'm gonna lose the long. We're just short on the Dow Jones. Right. I'm sorry to rush, but I've got to punch some numbers in now. So just give me a minute, and let's get ready for the event itself. Let's get punching some numbers. I'm just gonna set a limit order up. That's quick. Right. We've got 5 seconds to go. All right. Let's see what we got. Let's see what we've got. So, boom. God, I'm sorry guys, I need to get out of this. Hang on a minute. Right, I'm out. That was 23, 83, 83. There. And that was 355. Okay, well, not bad. Not bad on the NAS. I'm getting hot. I'm flustered. That was some pretty hot trading there on the NAS 100. Not bad though. Not bad. Good start. Let's get in on the data itself. So core inflation month over month data is actually 0.2%. That's a 0.1% decline in the month over month core inflation rate data. We also have a 0.1% decline in the core inflation annual rate, which is now at 3%, down from 3.1. We also have a 0.1% decline in the base inflation monthly data, and the 3% base annual rate is at a 0.1% decline from the analysts' expectations. It is a 0.1% increase from the prior figure, but a 0.1% decline from the analysts' expectations. So this is generally quite soft data. The stocks will be loving this data because naturally, inflation being cured and coming down means things become cheaper to invest in, which means investor capital comes back into more riskier assets such as the US stock market. It hasn't really made any bloody difference to the US stock market, to be honest, in this cycle because it's been rallying regardless. But it still is going to be reacting positively to those numbers. So it's an interesting one. Bit softer data than across the board than we were expecting. US 30 Dow Jones is going to be popping as well, but obviously we didn't have the trade in on that one. I wouldn't have had time to do the NAS 100 and the US 30 together anyway. Just to clarify though, beautiful trading margin, and it has cleared it. Came right the way up, is retracting from liquidity up at around 47. 020, 040 area, which is really nice to see. Commercial activity taking place. Let's go down here into gold. So gold's not really having too much of a reaction at the moment, but look, it's great that we didn't get out of our long-term long position anyway. It's it's just rallying anyway. Softer US data, of course, is going to be very beneficial for something like gold. It's going to keep the money there at the moment. We may not actually see too much of a crazy volatility strike straight off the bat because gold is housing so much US capital at the moment anyway. So there wasn't a need for any of the repricing and rebalancing to take place because of the data. So that's probably why we're not seeing some extremely big sort of, big bold move up so far. But look, guys, the data is supportive of the long-term long. That's all we need to do. And I think based on that information, we can probably rest assured and remove that short idea as well, if you want to do that. Looking down here at the Euro USD, I've already seen this. I got a fill just above at 1633. So that wasn't too bad. So I can just put that up there now. 1633, 330. And that puts me at about there. That's a 1 to 1.3. Absolutely blinding. But look, it's not bad, guys. At the end of the day, it's all fuel in the tank. I did anticipate getting nailed by the slippage, to be honest. You just can't do anything about it. But that's another winning trade, so not bad there as well. Let's go down to see cable. Beautiful. I just need to get the numbers on this one. I haven't actually seen that myself yet. Where are we? Hang on a minute. NAS 100 triggered past your target profit. Bloody hell, mate. Oh, jeez. Sorry to hear that, man. That is a very slow fill. Yeah, that is a slow fill indeed. Right, so cable. This one's not actually too bad. So this was at 336. So that's not too bad at all, actually. I'm quite impressed with that one. So 361. Oh god, hang on a minute. 36361. Wait, that was right. There we go. Yeah, so that's not too bad. So that was a 1 to 1.86 based on the 0.2. So that's not bad. Quite happy with that one. It's a good result. And then finally the USD yen ongoing. I already plugged this one in at the time of doing the trade, so that one's fine. Yeah, ongoing at the moment. We're not near there. The fill on that one though. Let's just double check that. So that one's a little bit worse. Not entirely sure why. Right, so that's it. 647. Okay, look, I'm going to be happy with that. That's probably one of the best. That's one of the best we've got actually in terms of the risk rewards. So that's not too bad actually. That's not too bad at all. If we can hit target profit on that, absolutely fantastic. So look, I mean, guys, this has been really good so far. Really, really good. I mean, NAS 100, sketchy as hell, but not bad. We got a decent return on that one. We, of course, got the gold, which is doing nicely, going back up into target profit now. It's not really doing too much of anything, but it is going into profit, which is always nice. We have got the Euro USD, which has done pretty well, a 1 to 1.3. So I'm not gonna turn my nose up at that. Not bad at all. We're up at big liquidity now, and I would expect it in the afternoon to come back down, doing its corrections over the course of maybe the next 3 to 4 hours. So not bad there. We obviously got the cable trade as well. Got a 1 to 1.86 on cable in terms of the sort of the best part of the fill that we could get, I suppose, which is not bad at all. It's finding some resistance up here at the moment. I think that may continue trading up to the predominant high up there, however, before continuing to come back down again, just because that's sort of the major commercial level that you should be keeping an eye on. So that's not too bad. And then finally to tie it all up, we got the USD yen, which at the moment I'm pretty confident in. I'm pretty confident. I mean, if it's anything I've learned over the last 15 years of trading these bloody things, the markets can certainly turn on their heads pretty quickly. All it takes is one word on the wire, and then that's it. Everything's, all of the losses, all of the gains, vice versa, can be removed, and the market will start turning around again. But I'm pretty confident. This is some soft data for the US. It was a miss on the data from the analyst expectations point of view. You have to think about how much money was going to be priced in the market for this as well at the same time. excuse me. So I think fundamentally speaking, I'm pretty confident in that one going down, but we may have to wait around for the bloody thing. I'm not entirely sure we'll see that one land on its feet with me being on the stream at the same time. I just don't think that's going to happen. Who knows? It would be great. But as always, no matter what, I am always firing out the results of the trading opportunities that we do in these public events. So you guys will get the result into the community, into the broader community later on today if it does take place. Just on that note though, okay, if you have taken the USD yen and if you are currently just floating around in it like the rest of us, please be aware that we will not be leaving this trading opportunity open over the weekend. So if you are trading anywhere, say, above this level by what time are we going to call it? What time are we going to call it? I don't know what time really. It needs to flex. It needs some room to breathe at the moment, so that's absolutely fine. We're only 20 to 2 in the afternoon now. I think by sort of 6 o'clock. If it's 6 o'clock, if we're trading above 152.50, then just instantly exit the trade because you want to be out of it before all of the commercial profit taking takes place, and you definitely don't want to be fading a Friday. So do that. And if by 9 o'clock the market's trading, to be honest, anywhere below this area but not its target profit, then just get out as well. Instantaneous get out, if it comes to 9 p.m. You don't want to be sat around in the USD yen over the weekend. Definitely not in these market, not in the market environment at the moment. This one is contracting quite significantly right now, but again, guys, look, there's nothing to worry about, so we'll just let that one run. But I think overall things have gone really well. I think they have. We've had some great entries. We've had some great trading opportunities. Our market biases have been pretty much spot on across the board. This is for UTC guys, UTC specific. The Aussie CAD having an absolute whale of a time as a result of today's data. Really, really nice to see. I tell you what, for those of you who are not UTC regular traders, we have been absolutely smashing the Aussie CAD recently. I cannot tell you how many profitable trading opportunities we have been doing in the AC. It has just been over and over and over again. It's been brilliant, and it's really nice to see that we're probably going to be landing another one before the week's end, which is great, at a 1 to 3.26 no doubt as well. Not really much going on in natural gas at the moment. UK Brent, yeah, nothing going on there. Pretty much unaffected, to be honest, at this stage. What about our silver? Yeah, there we go. Look, silver, beautiful. So this was our silver short. We were looking at this one yesterday. That was plugged into the fund. So that's really nice to see. A 1 to 2.46 there. That was a TP earlier today. Really good stuff. Aussie dollar. That one was a blowout. That's because of the AC. So in this context, we took the Aussie dollar short to cover the Aussie CAD longs risk at market. A little bit of a contrarian view trade, a little bit of a hedge. We do this quite regularly. We did take a hit in the Euro Oz. We decided not to get back into that one. And that's about it, really. Yeah, that's about it. Let's have a look at these US stocks. Probably was a nice shorting opportunity in that US 30 Dow Jones. Taking a short from up at the highs at around 47k back down to here to around 46.87. I'm not entirely sure it will make it all the way back down there. It might have been prudent to look at a TP maybe a little bit lower down. Maybe there, for example. You guys should get ready as well for a buyback opportunity later on today. So that's actually a really good segue into the US Open this afternoon. So the US Open team is going to be high risk, very, very high risk. I would be keeping my risk at 0.2% per trade without a shadow of a doubt today. There's, like I say, no doubt in my mind, 0.2%, per position this afternoon in our US markets. Remember that right now we're basically focused on European liquidity, which is shifting sentiment. When the US team gets into play this afternoon, it's going to happen all over again. I don't expect any sort of crazy spike, obviously. This is news event and news event only. But the kind of trading activity that will be taking place this afternoon will be a case of possible rebalancing, major commercial portfolio shifting as well. It's going to be a little bit of a mess. I would say focus on the data itself. The data is soft. It's good news for the stocks. It's bad news for the dollar. So probably look to trade the longs in the afternoon based on your technical parameters. So for example, I don't really see anything too good in the Dow Jones at the moment for a long, but the NAS 100 very much so, because there's nothing in the way. We're at all-time highs. So what you can do is just focus on looking at the retests, trading the continuations, and moving up from there. Same as the S&P 500. To be honest with you guys, you might want to just focus on the NAS and the S&P again like we did yesterday. Yeah, that might be the way forwards. So yeah, not too bad. Not too bad. Ended with a loss from that NAS long. Oh, I'm sorry to hear that, man. Yeah, sorry to hear that. That NAS 100 long nailed you. Yeah. Yeah. Yeah, it does happen. Happens to me as well. Happens to everyone. It's a luck of the draw, to be honest. You know, when it comes to things like broker fills and stuff, it is a luck of the draw. Sometimes you get really lucky. I mean, I can't remember the very last event that we did like this, but I do remember that almost every single trading opportunity that we took, most of my positive risk rewards were getting wiped out from slippage. I've never had one where it filled above the price. I've never that's a first in an event like this, certainly, but yeah, definitely most of the risk reward gets wiped out. But that's the reason we trade so aggressively. You know, on a regular, I do not trade like that. The entries are always a nice margin above the breaker structure point or below it. The target profits are lower down. Where our risk reward is never sort of exceeding 3.3, 3.4 at maximum. But we adapt to these market cycles because of the situation that we're trading in. But today it was one of those things, wasn't it? It was one of those things. That's why we keep our risk down, because the worst case scenario is we're going to take a hit, and if we tighten that risk in and we do 0.2%, that we're not really losing too much, are we? And that's the whole reason we do everything that we do. So that's about it, really, guys. That's really about it at the moment. We've had a nice break, close, and retest of the structural point up here on the USD yen. Looks like it's come just a little bit above there, just about there for the break, close, and retest, but it is now consolidating here. This is really the time that's going to be most important. Is the market going to break and close above this level now? Because if it does, the trade may well be a loss if we actually break back above the 152.57 area. So long as it stays below it and consolidates for a while, I'm happy with that. That's absolutely fine, because that just means it's building up and taking a rest before its next leg down into the 152.18 area. I'm confident with the liquidity point that I've chosen. It's a really nice big point of inflection. It is the main one between there and there. So I'm happy with that. But this is a really volatile news event. We could have had the one big bar down, and it could be coming back to consolidate it could be coming back to correct the entire thing, which is very much in the nature of these types of news events. So we just got to be patient, let it do its thing. We've got hardly any risk at market at all on this one. It's a 0.2% trade. So let's just see how we fare over the course of the next few hours and see where it goes. I'm not going to be exiting it early if, for example, it comes to 4 o'clock and I'm trading at 152.70. There's no reason for me to get out of it at that point in time. I just know that I don't want to be out of it. I just know that I do want to be out of it before the weekend. That's an absolute must. And I don't really have anything else to add to that right now. That's about it. So are there any questions or anything, ladies and gents? Anything at all that I can look at or that you want to know before I go? No? Okay. All right, team. Well, listen, if you need me, if you want to ask any questions, if there's something that springs to mind after the fact, then please hit me up inside the trading room and I will be happy to get back to you ASAP. In other words, thank you for everyone joining me today. Thanks for everyone on the other side as well on YouTube who will be no doubt watching this or catching up on it in the next couple of hours. Have a very lovely weekend if I don't speak to you again before the week's end this evening. Like I say, have a lovely couple of days away. Look forward to catching up with you all on Monday morning so that we can start it all again. So take care, good luck, trade safe, and have an awesome couple of days. I'll see you then. Thanks, guys. Bye-bye.